So a bit of a chaotic end to last week and the start of this week, with noise coming out of China with regards to the COVID situation and mixed sentiment as to whether China will be um, making changes to its zero COVID strategy. So it's kind of flipped over at the start of the week. So we've seen some gaps, with the dollar surging and making ground back to where we were last week. On Friday, the non-farm payrolls was mixed, less inflationary, in some of the background data with returns to wages and the unemployment rate, disappointing, but the headline was pretty terrific and the revisions were good. Um, so we're moving quickly, really, over to US CPI coming out this week. Core prices have likely slowed modestly for October. So there'd have to be a significant change, really. I mean, they're still likely to be strong month on month, um, around 0.4%. Um, so not sure that it'll have much impact if it comes in line, really, with expectations. More of the same. The dollar smile theory playing out. That's to say that I mean, there's no reason for a weaker dollar at this point. Um, Now, having said that, technically we've got this nice harmonic daily crab pattern turn up on the charts. It's been there for some time, but we've been sort of consolidating within this range. We're now on the backside of that trend on the daily chart. We've got this W formation in place over here, and we're sort of moving into potentially going to move into the support of the W formation for a move up, so long as we can see 1630 hold support. In terms of the US dollar, it's still on the front side of this broader trend line on the daily chart. So it would be pretty significant if it were to break 109.50 on the downside. But so long as we keep within this trend, the bias is to the upside. Ideally, we want to see 113. We want to see business above 113 for a convincing move to the upside with that. And in terms of yields, we haven't really sort of changed from where we were last week. I mean, it's pretty plain to say you've got that M formation there. We've moved into the resistance. If we can get through the resistance and maintain this trend, then we're going higher. I suspect, however, that we're going to start to flatten out a little bit here. Um, so we'll just have to see how that pans out. We've also got the midterm elections. So America, that is, they're going to go to the polls on the 8th of November. And typically we'll see a Republican majority in the House and Senate. That's sort of in line with historical relationships, as well as the low approval ratings that Biden has, due to the um, dire straits of the economy, inflation, and crime. So those would be the main drivers, really, of the week. We do have also UK GDP. Um, so we'll have to see how things pan out with that. The services sector is probably the most vulnerable, in that respect. But I don't think there's going to be any surprises, really. Nothing that the Bank of England hasn't already forecasted. So I'm not sure that we're going to see much volatility of anything there that comes out in line with expectations. And I suppose, really, central bank speakers will have Fed speakers coming out the woodwork, and also that of the RBA, Bullock, we'll be speaking as well, I think on the 9th of November. Yeah, the 9th of November. Um, so really, I mean, for for fundamental drivers, I think it's going to come down to sentiment around the Fed again. We had the 75 basis point hike last Wednesday, but crucially, it was flagged a longer monetary tightening path, and there were warnings that the terminal Fed funds rate could rise above previous expectations. So, if we get more of the same of that being ground into the market, then when we're looking at these yields, then we're going to need that to push them higher. I mean, that's a pretty bearish scenario right here on the twos. But in all, it depends on each session, your setups for the session as we move into the opens and so forth, whatever your strategy might be. Over here, we're putting into practice the Stacy Butt methodology, and yeah, so far so good. Positive month last month, 6R up. Many days we weren't actually active in the market for various reasons, and we're yet to put anything on this month so far. So positive we remain, and we'll just have to see how the week pans out. But we've had some volatility already. We look at the Aussie, for instance. There's nothing really that we can implement. We're waiting for busier markets to open in the US, but we've got that gap down. So we'll be looking for that to be filled, really. And a positive US dollar thereafter could see a correction of these recent attempts to move up in these dollar crosses, such as the euro over here as well. Plenty of price imbalances left behind from Friday's business. For instance, we've got so Friday, Thursday, Wednesday. So we've got all of this liquidity here that's been taken up. If we can get back down into here, potentially for a reversal back higher to come into those prior highs. But again, we'll just have to see how things pan out as we open for each of the days. Have a good week.